Hey there, savvy investors and future millionaires. Welcome back to Dividend and Conquer, where we transform your spare change into a money-making machine. Before we dive in, imagine this. You find a $20 bill in your old jeans. Pretty awesome, right? But what if I told you that with the power of smart investing, this could be your daily reality? Stick around to find out how. In today's digital bonanza, letting your cash gather dust in a savings account is akin to watching a silent movie in the era of 3D IMAX. It simply doesn't make sense. In this fast-paced world where technology drives financial markets at the speed of light, sitting on idle cash is like clinging to outdated tools while the digital revolution unfolds. With inflation prowling around like a stealthy predator, eroding the purchasing power of your passive savings, your hard-earned money requires an active role in your financial saga. It's crucial to mobilize your resources, turning them into soldiers on the battleground of wealth accumulation. Dividends emerge as your most trusted ally in this scenario, a robust shield in your financial arsenal. These regular payouts from investments aren't just returns. They're your frontline warriors in the relentless fight against the inflation dragon. By choosing dividends, you're not just investing, you're strategically positioning your wealth to grow, leveraging the dynamism of the market to safeguard and enhance your financial future. Think of dividends as your financial knight in shining armor, ever ready to defend and multiply your wealth in the face of economic uncertainties. Now let's talk strategy, starting with the secret weapon of many savvy investors: covered call ETFs. Imagine these as a double-edged sword, offering gains from both stock appreciation and those sweet dividend checks. A covered call ETF, in layman's terms, is like having a smart robot that does all the complex stock option deals for you. You invest, and it works its magic to bring in the dough. However, don't forget, with great power comes great responsibility, or in this case, some risks. These ETFs might face the music if the stock prices dip or options lose their sparkle. But when it comes to rewards, they can be pretty impressive. For instance, let's take a gander at ETFs like QYLD, XYLD, and RYLD. These bad boys have been known to outperform your average dividend stock. But how much can they really make? Let's crunch some numbers. Imagine our friend John, who's got $15,000 burning a hole in his pocket. And not because he's trying to reenact a magic trick gone wrong. By placing his bet on covered call ETFs, he could be looking at a return of about 12.53% annually. This means in just 1 year, he could earn roughly $1,880 in dividends alone, or enough to buy 376 cups of artisan coffee. Because who doesn't need that much caffeine? But here's where it gets exciting, and not just found extra fries at the bottom of the bag exciting. If John plays the long game and reinvests these dividends, in 10 years, he could be sitting on a stash of over $50,000, bringing in a monthly income of around $564. Hello, monthly pizza parties. Fast forward to 30 years, and we're talking big money. Over $600,000 in his kitty, earning him close to $6,648 monthly. This, my friends, is the power of compounding, turning John from a regular Joe into a mini Warren Buffett, all without lifting a finger, except maybe to click reinvest. And hey, if you're enjoying this content so far, don't forget to hit that subscribe button. Next on our list, we have REITs, the unsung heroes of the investment world. Picture this, you and your friends pooling in money to buy a skyscraper. That's basically a REIT, but on a much grander scale. These trusts invest in real estate and share the rental income with investors like you and me. They've been quite the performers, too, with an average annual return of around 10%. But remember, they're like a roller coaster in an amusement park. Thrilling, but with ups and downs. The income can fluctuate based on how many tenants they have and the overall economic climate. Now, let's say John decides to dip his toes in the world of REITs with his $15,000, trading his boring bank statements for some real estate excitement. Choosing wisely among options like Blackstone Mortgage and Orchid Island Capital, he could see an average dividend yield of about 15.4%. This means, by year-end, he could rake in around $2,310. Not quite swimming in money like Scrooge McDuck, but definitely splashing in the kiddie pool levels of wealth. But hold your horses, and maybe your unicorns too. If John goes all in and reinvests this for 30 years, his investment could balloon to a jaw-dropping $1.39 million. That's a number so big, he might need to hire a parade of accountants just to count it all. He'd be pulling in a monthly dividend of roughly $18,976, which is like buying a new car every month, or for the more ecologically minded, a fleet of bicycles for the entire neighborhood. At this rate, John's mailbox will be so stuffed with dividend checks, he'll need to hire a personal assistant just to fetch the mail. Last but not least, we roll out the red carpet for the Dividend Aristocrats. These are the creme de la creme of companies, having increased their dividends for at least 25 consecutive years. They're like the wise old wizards of the stock market, steady, reliable, and powerful. Investing in these companies is like getting a VIP pass to a rock-solid financial future. They've been known to perform admirably, especially during economic downturns, because they deal in essentials that people need, come rain or shine. With companies like Procter & Gamble and Johnson & Johnson in their ranks, the Dividend Aristocrats have averaged a return of about 8 to 12% per year. If John decides to play it classy with the aristocrats, acting like financial royalty, he might score an average return of 10% with a dividend yield of 2.5%. So his royal treasury of $15,000 could fetch him around $375 in dividends annually. That's not exactly buying your own island money, more like splurging on fancy coffee every weekend kind of cash. But wait, before you scoff and scroll, it gets better. If he lets this money marinate like a fine wine for 30 years, reinvesting those dividends with the patience of a saint, his portfolio could puff up to about $245,000. That's a number that might make even the Monopoly man raise an eyebrow. We're talking an annual dividend income of approximately $6,125. Now, that's enough to cover a luxury vacation every year. Imagine sipping margaritas on the beach or buying enough sunscreen to start your own small business. John could be gallivanting around the globe all thanks to those sneaky, quietly compounding dividends. So, while it might start as couch change, with time and patience, it could turn into treasure chest level wealth. All right, folks, let's tie a big shiny bow on this financial gift basket. Whether you're a fan of the daring covered call ETFs, the ritzy world of REITs, or the steadfast dividend aristocrats, like financial wizards, it's all about not putting all your magical eggs in one mystical basket. Think of it as a financial smorgasbord. You don't want to be the person who only loads up on mashed potatoes. A balanced, diversified portfolio is like a golden ticket. Or better yet, your all-access pass to a more secure and laughably prosperous future. It's the financial equivalent of a perfectly mixed cocktail. Just the right amount of zest and zing. Now I'm turning the mic over to you. Which of these high-flying strategies are you ready to pilot? Are you going to soar with the eagles or chill with the owls? And hey, if you've got any other golden nuggets, investment unicorns, or secret treasure maps, spill the beans. Drop your wisdom bombs in the comments below. Don't be shy, we're all friends here. Are you the next Warren Buffett? Or just Warren the Buffett enthusiast? Let's hear it. Remember, we are not financial advisors, and the content presented in this video is for informational and educational purposes only. Always consult with a licensed financial professional before making any investment decisions. Remember, the key to mastering dividend investing is patience, consistency, and a thirst for knowledge. So keep learning, keep investing, and let your money work for you. And as always, don't forget to like, subscribe, and hit that notification bell to stay on top of all things dividends. Thank you for tuning in today. Keep conquering, and I'll see you in the next video.